Hey traders, this is Ron Hayden at Market Tamer. Hope you guys had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. All right, we're going to kick off here with the diamonds, the Dow ETF DIA, and we can see it was up a little bit today, about $1.70, about 0.7%. We're still riding essentially this blue line 5-day EMA. We're getting closer and closer to actually touching some of these lows, which tie into the 50-day SMA in orange. Again, no commentary change. Looking at something different, the mid caps, the MDY. If we zoom in, they're sort of just bull flagging up here as they come into the 50-day, which ties in with those lows. And then if we switch over to the Qs did the best, almost 2%. They closed ever so slightly above the orange line. This could constitute as a breakout. I mean, technically it is. Do I buy it? Not necessarily. However, with earnings season in play, maybe this is the catalyst, like I said, to start the week. Maybe this is what gets us going. But it is a technical break. However, volume was light. It's sort of like trust but verify approach. This is the only index that has done so. So I'm not ready to jump on the bandwagon and say, oh boy, here we go. And then boom, 200-day becomes a higher probability. Not just yet. I mean, again, technically, that's what we're seeing on the chart, but only on the Qs. Not the spiders, not the others. I mean, the SPY had a nice day today, but it is not above its 50-day. Once we start seeing some of these other indexes join the party, that helps validate the bullish breakout on the Qs or whoever was the leader, if you understand what I'm saying. Taking a look at some other stocks, let's take a look at JP Morgan. This stock was up 0.73%. But what's interesting here, it basically built some support here. It's an inverted head and shoulders, albeit not the best looking one. Left shoulder here, head down here, and then now we're getting the right shoulder. It closed new near-term highs. The earnings report came in this morning, pre-market. So yeah, the 50-day is there, but given the earnings move, closing at the highs of the day, breaking above previous closing highs, I don't think the 50-day is really that important as the 200-day is. I mean, of course, getting above the 50 makes you feel even better about getting to the 200 if you're a bull. But this was earnings fundamental. There was, bigger volume. It gives more validity to this type of move. Where would I consider a potential stop? Basically, today's intraday low, and that was at 98.60. If I could put an alert at 98 bucks, if I close below there, I may not want anything to do with this from a political perspective. You hold that. If it doesn't, this shelf will become resistance, and then down here we go. That would be the next target. So there's something to watch, again, always from a paper trading perspective. Let's take a look at MU. We're going to look at Micron and Adobe next. So here's Micron. This is a stock that is entering a seasonally bullish window. However, it is not yet participating. This is what I talk about when I show you guys, not only is it in a seasonally bullish window, but I'll show you the little tricks, if you will, the confirmation that it looks like here we go again. Not just there yet on Micron. We still need to get further above that 50-day SMA in orange. But how about Adobe? Another seasonally bullish stock. It's starting its run. Here's January. It dipped one day lower with the fake out in the whole market. And since then, it's basically been straight up. There were 2 pause days, but look how low the volume is on the down days. So are the black bars, the up days, beating the down days? They sure are. It's not like they're beating them tremendously, but they're beating them. This is all a good sign. Now that we're above the 50-day, which technically closed solidly above on the 10th, just 5 days ago, now we're at the 200. We break the 200. We start coming up in here, and then up to here are the upside targets. So I do like Adobe, what it's doing right now. With that said, gang, this is a second chance event. I've never done this before. It's going to be 2 events in one day. If you can't make noon, you can make the 8 p.m. hopefully, or vice versa. So noon Eastern, which is New York time, 8 p.m. West Coast time. If you're in Europe or you sleep during the day or something, maybe you can make it to one of these. You need to be there. Over half the seats are gone for each event, not total. We're past halfway on both, and there's still 2 days to the event. You got to register at the bottom of this video. If you got sent an email, click in the email. If you're on YouTube, if you click the more information button below the video, you'll see the 2 links will populate there. Register ASAP within the first 5 minutes of going live. Just like I always do, I will show you the hottest proven stocks. I will show you how we could have spotted and been ready for, and I've been using this example. It's been year after year, especially lately. Here's Netflix, down, down, down. All of a sudden, look at these bars. And you might say, well, that's when the upgrades come in. Exactly, but why weren't they upgrading it when it was over here? Isn't that hilarious? This time it was all negative Nelly news, as if Again, hypothetically, driving the stock lower so somebody else can pick it up cheaper, and then it starts running, and all of a sudden the upgrades come in here. You're almost like, what were y'all thinking? There's not a whole lot that changed from here to here. If anything, you got it at a nice discount from up at 380 all the way down to 230. Stock was on sale. But what did we know? We knew that when January comes, it enters that window of time where the stock begins to explode. There's January 2nd where my cursor is. Look at that little puppy go. All right, so again, make sure you register at the video. Let's move on here to NKTR Nectar. I just want to highlight this one. This was a little bull flag I talked about last night. Nice big volume bars. The only down day was really low in volume. And what happens? Pop goes the weasel. It's off and running. Spot, which is Spotify, broke the 50-day today. The volume wasn't the best, but you know what? It was certainly bigger than the other day, and in fact, bigger than any of the previous big up days. Target initially 140, about $9 higher, but then there's a long way up, probably into the 170s. And here's a stock that got beaten up pretty good. It's PLCE, which is Children's Place. If I go back to a 5-year chart, check this out. These are weekly candles. Here's where we're at. We've already closed below these swing lows. Next target 70, still $15 lower on a weekly basis. And if I go to a daily, not much has changed. We're already below these lows. So it's just not looking good for PLCE. So reminder, please register ASAP. I promise, give me 5 minutes of your time. That is all I need to prove to you how incredibly powerful this information is going to share with you. You will leave this webinar with high probability trade ideas, bullish and bearish, on the house. All right. Look forward to seeing you there. Wish you guys all the best.